Good afternoon, friends. Many thanks, Karthik, for the introduction and for the disclaimer or warning. So, some of you could have actually continued having the lunch. At least we will be assured that you will not be going up to sleep. The other way which we can do this is to make it totally interactive. Otherwise, even when I am pausing, I myself will fall asleep. So then it's better that all of you also interact with me and therefore make this a fruitful session for all of us. Anytime, any point. In case I am covering something later on, I will let you know that yes, this will be covered up. Otherwise, please feel free. And this is the whole idea. It's the whole idea of exchanging experiences with each other. Many thanks to Chamber. This is in fact, I think now, yeah. As soon as I cleared my chartered accountancy, I actually joined Chamber to, join in the sense to take part in their activities. Today it's a whole circle. I've been for the past 10 or 11 years and again now also been helping somewhere or the other wherever they feel I can help them. And today I am on the dais for the International Tax Committee. Many thanks Paresh bhai, many thanks for the Chamber. Now, what is this topic about? Payment on account of remuneration. I have slightly changed the topic from what the kind of schedule what it mentioned. Definitely, payment on account of remuneration at the end of the day talks about what? It talks about taxability. What is the tax outgo for us when you look at salary payments? It is not just on account of remittance. Sometimes there are salary payments where you may not have any remittance to make also. And we'll cover those kind of cases also, but essentially, if there is a remittance, what procedures we have to look at, and if not, then what is the kind of taxability that an employer and an employee both should be aware of. Otherwise, it does come as a surprise. So, starting off, this is what the outline is. I'm sorry, you may not have the printout in your hands, it should reach in some time. But anyways, this is the idea, the taxability under the Act and the DTSS, these are the basic provisions. Then we come into each particular unique kind of payments, which are the ESOPs, the leave salary, tax equalization and hypothetical tax, social security contributions, pensions. While it is not strictly in a ways you can consider not within the domain of Article 15, it has a separate article, but I have slightly touched upon it because there are issues. And then coming to deduction of tax at source, where our practical issues come up, how do you finally deduct tax at source, how do you finally remit the payments? So please interject wherever necessary. And why this has come a bit of a uniqueness to it is also because of the fact that when you interact with, especially with employees, those who have done a cross-border transfer, they have come from one place and they have been assigned to India, or those who have gone abroad, and you realize that they are totally blank. They are not here, they are not tax consultants, they are not into the tax field, and they are totally blank. They feel that, okay, what is this going on? When we talk to them about this or several other terms, they are at the fine point of saying that if I have to pay more than what I was supposed to pay, I don't want to pay that. And that is where also employers also have to take a call, because sometimes they end up paying that extra tax. Unfortunately, sections 15 to 17 are worded in a mindset where an employee is a person who is born in India and is going to die in India. He is never going to step out of India. Unfortunately, that is the way that the sections have been structured. They have not visualized that kind of cross-border payment issues. To a limited extent, section 10 gives certain exemptions. Other than that, sections 15 to 17 don't come into play when you're looking at it, and therefore you get hit both ways. A person who is left his home country to come into India faces that problem because his home country feels that yes, he is supposed to be taxed there, and India also feels that no, he must be taxed there because the wording says so. Unfortunately, that is where this kind of fight keeps on happening. Thankfully, we have double tax avoidance agreements in place which do relieve to a large extent this kind of a relief, but again they have their own kind of unique issues. You go into their wordings, you feel what is there. Some areas in fact are there where there is particularly no law in a place. We are going by certain practical, and I will come to such practical case studies where in fact we ourselves have taken a call. Okay, let's do this, and then let's see what happens. We'll have to fight out if necessary, but then at least this is where we feel reasonable that these things, where there is no law per se available to us to go or back upon, we will have to take a practical call. So this is some areas, that is why it becomes very important to study this topic. The base provisions obviously are governed by sections 5 and 6 because we are talking about non-residents or residents who are going outside India will turn non-residents. Either way, so sections 5 and 6 become very important. Section 15 obviously because that is the section which determines what is salary and when it will be taxable. Now, when you talk about non-residents being taxed here or residents who go abroad and become non-residents, their whole idea is that we have only two correcting factors, residence and source. And if an employee is a resident of India, salary income is taxable irrespective of whether it was sourced in India or outside India. This is similar to any other income. A resident Indian will be taxable on his worldwide income, that's simple. And that is the case even for salary income. And that is where double taxation issues also arise. And if salary income is sourced in India, it is taxable irrespective of whether the employee is a resident or a non-resident of India. This is simplicity of what the Income Tax Act states. Now we have to look at whether double tax avoidance agreement relieves somewhere something or not. Otherwise, they are actually caught within the net of double taxation because of these two principles. We have certain short stay exemptions in the Act and the treaty, and that is where we will also study. I'm not very sure exactly in this course how far residence in India has been covered up. I'm not very clear. If in case you could give me some feedback, has it been covered in the sense that detailed case studies or any such kind of thing? Not as such, then I would prefer to cover that in some part if you don't mind, because that is the key to whether a person becomes, for salary taxation, that is a very much of a key, because if that person is not going to be resident, then the matter ends, to a large extent that helps him out. Now, why I am talking about resident in detail is because there are certain clauses meant for employment, meant for employees, and therefore that comes into play here. The base provisions is that an individual is resident in India if he obviously crosses more than 181 days in India, or he crosses 60 days during the year, and in the past 4 years he has crossed more than 365 days. These are the base provisions. But you have a certain kind of, you can say them the special cases. There are special cases are those who are a citizen of India, who lives in India for the purposes of employment, and this proves very, very important for the whole of the BPO industry. A person who lives for employment outside India, being a citizen of India, can get benefit by saying that his 60-day condition will remain ineffective. It means that 181 days and more only if he is in India, only then he remains taxable, otherwise not. And the second condition is a citizen of India or PIO who being outside India comes on a visit to India. Both these clauses hold relevance when if, say, for example, a person who has gone out of India who comes back to India, where will he be taxed for or what will he be considered as? Obviously, being a resident, as we already discussed, he will be taxable on a worldwide basis. An individual can be a resident but not ordinarily resident. Again, there the two clauses are, he should be a non-resident for 9 out of the past 10 years, or he has been in India for less than 729 days during the preceding 7 years. And what special benefit do they have? They will not be taxed on incomes accrued outside India unless earned from a business or profession in India. Now, obviously, this has a history to it. It was there from British times when we had our Income Tax Act 1922. That was when they had brought in this relief for British citizens mainly. That has been carried forward into our own Income Tax Act, and therefore it also helps NRIs who come to India. There have been lobbies, and definitely NRIs wanted this relaxation, otherwise they felt that they could not come and look at their investments or come to India freely. Sorry, yeah.
When you say
yes,
second proviso,
right,
person outside India
yes,
comes to India for a visit,
right.
they don't use word person non-resident. So what do you mean by person outside India?
I would say, in fact, this has been a case where we have just now dealt with a person. I'll give what happens is, being outside India, this is a clause which is not there in otherwise any of these definition terms. What we have is the person who leaves India for the purpose of employment, but being outside India, they are not saying he has to be a non-resident. He can be outside India by being even a resident for that matter. And that was a case which we had recently where a person who had come to India, a Belgian citizen who had come to India, and that person's husband fell sick. And because of that, she also had to stay into India. In fact, their whole business and everything, that was the first time that they became resident in India after maybe decades. But because they crossed the number of days, simply because they crossed the number of days, they became resident in India automatically. But before the end of the year, she went outside India again, she went back to Belgium. Again in the next financial year, she came to India. Now, can we say that because she was resident in, say, for example, financial year 15-16, and she has gone in, say, February 2016 outside India, she has come back in, say, April or May 2016, should we say that she is not outside India? Should we say that just because she was resident in FY 15-16, she will not be able to take the benefit of this? In my view, I would say that if there is a base outside India, I would say that what do you mean by being outside India? That person had its offices, business, she was running a business, full-fledged business outside of Belgium, and there was no linkages too strong that we can say that she was based in India. In that sense, I would say that she was outside India and she had come on a visit to India. Financial year 15-16, she may be resident because she crossed the number of days. That's not what we are discussing. Financial year 16-17, I can still claim that she was outside India and she came on a visit to India, and still 181-day clause should apply. That is what my view is. Sorry. Yes.
Yeah, I confirm your view.
Okay, sir.
But by a different analogy.
Yes, sir.
I am saying that in both the year,
Right.
she was person outside India.
Right.
She was on a visit in the first year.
Perfect.
But she violated that 183 days condition.
Correct.
And therefore she became resident.
Perfect. Right.
But she is still a person outside India.
Exactly. Exactly.
So the second year,
Right.
since she was a person outside India, she
Right.
only violated the condition of a visit. She
Right.
doesn't become a person in India.
Perfectly. That is what that is the view even we are taking, because the fact remains that it talks about being outside India. It doesn't talk about a person being resident of India or non-resident of India. It doesn't say that that person has to be non-resident of India, only then they can come on a visit to India. That is, in a way, that it's very difficult to find out why they use these words instead of being a non-resident. But it works in the favor of people who have to come into India once in a while, who otherwise don't intend to stay in India but have crossed the number of days because of some other reason. Maybe here there was sickness in the family, but there could be any other reason. He could have chosen to stay into India for 183 days or more. He could have said that this, and this has happened also for one of our other clients, who said that, I want to, in that 1 year, he said that he was in a gap year kind of thing. When you're looking at employment structures, you're looking at, he was employed outside India. Then he said that, no, I want to come here and try out in India something. He came to India, did not work out. But he was here for 8 months of the year. But by the 8th month, he realized that this is not working out. He got another employment outside India, he went back. Now, just because he was resident of 1 year does not mean that he becomes automatically a resident for the next year, and by saying that he was not a non-resident. I would not say that. He was outside India. His base and everything was outside India. He came alone here. His wife and the family was there only, where he was otherwise outside India.
So last question.
Yes, sir.
Can technically we say
Yes, sir.
that for number of years I can say that I am a visit to India and being resident every year.
Fully agree. In fact, I would not say that even technically, practically also it makes sense. Sometimes you don't want to say that, a person just to be made resident, by hook or crook make him a resident. These are untested waters, by the way. I have not seen any legal precedent on this. Frankly, these are, probably one of the client who was just come may become first of the few cases that may go into litigation. But the fact remains that what do you mean by being outside India? If you have kind of an equal base, or in some cases, there are people who are situated in UAE or some other countries where actually, frankly, they don't keep a house for a very, very long time. Somehow they never, or they are not able to buy a house, they stay on rent, their linkages are very minimal. And then they come into India, they actually have a more stronger base in India. It's just that they are employed there, that is the reason they are outside India. In those kind of cases, it becomes probably, to my view, a bit of a scarier proposition to say that he is being outside India if he regularly keeps on coming into India. So there may be an issue, but fully agree that yes, otherwise if there is full family or otherwise he himself is staying outside India for a long time, I would not say that just because he became resident in the earlier year, he will not be able to take this benefit. An NOR status, as we know that that benefit will typically be available for 1 to 3 years post the shift to India. So if anybody who is coming in, there have been quite a few cases of people actually returning back to India in recent times. We are at the cusp of change today. Today, Donald Trump is going to become president of USA, and there has already been discussion of what will happen to the H-1B visas and a lot of discussion going on. Either ways, there are quite a few people who have been either enfranchised with what India is looking forward to, or otherwise also they are disenfranchised with what is happening outside of India. There are a lot of people who are coming into India, and where this kind of clauses actually help very much. And if you plan it out properly, it can be stretched from 2 to 3 years also, but that is on the numbers game. You have to actually look at a physical presence of days. Frankly, India is one of the best tools in that sense that you are just looking at a number of days. I don't know whether you know that UK never had a definition till recent times. It was only made by judicial precedents that what is a resident of UK. And by intention and by how much he stayed, what are his linkages, it's totally subjective. I can very much say that no, I am a resident, I am not a resident. That was a kind of situation which was prevalent there for a long time. They learned from India and they also now brought in a number of days test, obviously with some other kind of conditions. But frankly speaking, India has a very good test which can run either here or there. The kind of example which I gave of a Belgian citizen, she did not intend to become a resident of India, but she became because of some compulsions. But that, yes.
If you take another view,
Yes, sir.
what problem is created
Right, sir.
is that then she has to prove the condition 1, proviso 1 next year otherwise.
Sorry, condition?
1, that
Yes.
being a citizen of India,
Ah.
going abroad for the employment, then only they qualify for 60 days to 183 days.
That is what they actually, their CA brought us that option. Unfortunately, that is the reason I have been kind of again and again stating she's a Belgian citizen.
Yeah.
So that actually option was not available to her. Otherwise, yes, very true that one of the easiest and the most perfect ways of becoming a non-resident is gain an employment outside India. If you are a citizen of India, there can be no surest way of saying that no, I have left India for the purposes of employment outside India, and that is where we come into actually the trickier part of what happens in case of employees who are assigned outside India, or those who actually have their own businesses and they feel that yes, I want to shift outside India. In fact, they also can state that yes, I am employed with my own company. There is no restriction on that. There is no restriction on the fact that you cannot be employed with your own company outside India. You can take the benefit and go outside India. You should be in India for less than 181 days. The problem that happens is a lot of people decide this post-September. They have already crossed 181 days. And then they step outside of India and say that no, I want to take that 181 day benefit, but what's the use? They have already by September crossed 181 days in India. Even by taking the benefit, they will still remain resident of India. And then there is this controversy which I just now explained about him being outside India and coming back to India on a visit to India. So what happens in year 1, he is crossed 181 days. He has gone on employment outside India, no doubt. But 181 day relief also doesn't help him because he still remains a resident of India for year 1. Year 2, when he is coming on a visit to India, is he outside India? Now if we take that analogy which says about no, I want to check the residential status, and earlier he was actually a resident. Now if as we discussed right now for that Belgian citizen, I can very well say that no, I am actually outside India. Though I was a resident in year 1, I am outside India because of several linkages, I have my business and everything. Can you put that same ground for somebody who has just gone outside India for an employment? Does he have enough base in India or outside India? That would become a very factual situation, and it becomes much more difficult to to prove it against to the tax officer. And frankly speaking, tax officers are asking all these details. No longer are they going by what we have written in the form. Yes, sir. Sorry.
No.
Yeah. So no longer are they going by what they have written in the form. They'll ask you, give me the copies of the passports and show me where the stamps are, and tell me what has happened. What is it outside India that he has done? Where is the employment? Get us an employment certificate. All these questions are asked where there are huge issues involved, where there are significant incomes which have been earned. Otherwise, very frankly speaking, change of residence is one of the key areas where income tax can be played with factually. There is nothing wrong in what you are doing. You are actually going out of India and staying for less than 181 days in India. There is no planning involved, but at the same time, you can take benefit of whatever non-resident benefits are available under the Income Tax Act for you. So that is to be kept in mind, that you should be very, very sure about what date you are leaving India, and you cannot then claim that okay, I have been crossing 181 days, then also I have to give relief. Unfortunately, quite a few times clients come to us by saying post facto, they have already gone, they have left, and then they come to us and saying nahi abhi bachao humko. There is nothing like you can do beyond a point. I put the same conditions in a smaller flowchart, but I think this is not our topic of discussion today, so I'll just leave you with it. Essentially, whatever we have discussed, these conditions, if you go and follow this flowchart, it makes it kind of easy when you are applying the factual pattern. That is the only reason I have given this. Essentially, was in India for 182 days or more during the previous year, yes, then he is a resident. You have to just consider whether he is an NOR or an RNOR. Essentially, whether he is a not ordinary resident or not. If this clause, which second clause, if it is satisfied, depending on that, he will be determined whether he is a resident or resident but not ordinary resident. If he is not crossed 182 days, was he in India for 60 days or more in the previous year? If no, then he is clearly a non-resident. Less than 60 days, you are clearly a non-resident. There can be nothing better than that. Unless, but in general, you can never satisfy that test. 60 days is a very, very low time. Generally, especially for Indian citizens outside India, they practically spend some time here in India. If you have spent more than 60 days, again there are reliefs available as we discussed for the special cases. First is an individual, an Indian citizen or a PIO who being outside India came on a visit to India, non-resident. No is an individual, an Indian citizen who has left India as a member of a crew or for the purpose of employment outside India. Again, yes, if he is so, then he is again a non-resident. Now, if you notice both the last boxes at the bottom, on the left hand side we have a person who was being outside India, came on a visit to India. There it is both Indian citizen or a PIO. But when you look at the person who has left India as a member of a crew of an Indian ship or for the purpose of employment outside India, PIO is not covered. And that is actually where our client actually could not come in, because there the only Indian citizens are covered. And if no, then was he in India for 365 days or more? See, if you notice that 60 days in India he has crossed, but has that person also crossed 365 days in the previous 4 years? If no, then you are still non-resident. And if yes, then you go back to the status of whether he is an NOR or ROR. Essentially he is a resident, but whether he is a not ordinarily resident or not. I think majority of this we already discussed on this slide. Outbound assignees leave India for the purposes of employment. Purposes of employment itself has a lot of meaning to it. There are a lot of decisions also. The fact remains is that it may not be necessary that you have an employment certificate already or an appointment letter already before you left India. Definitely it helps a lot. But you could very well say that I am going out to explore employment opportunities outside India. Yes, it has to be obviously documented very well that yes, you have attended several interviews and finally you probably got an appointment letter from out of the 3 or 4 companies, you got an appointment letter from one of the companies and you are employed there. It does not make it a point that you have to be from day one employed with some company. It helps, but it is not necessary.
I tell you, Rutvik, in
Yeah.
certain countries like Australia or some other countries,
Right.
where you have only a PR, you just have to go on a PR, you don't have any employment.
True.
Because you have to go there and search for the employment.
Correct.
So it takes about 1 to 6 months
Yeah.
to take the employment.
True.
So in that case, I think the PR will help us.
Yeah, definitely. A lot of people actually they don't have unless you are there you cannot even seek employment. In most of the cases that happens that a person has to be there in that country, then he can go and give interviews. No, he can't do everything sitting here. But he has gone for that purpose. And probably if he fails in that purpose, what happens? That's a different separate story. But if he gets it, then doesn't mean that no, he's still not. He got it only after 2 months, or as Chirag is saying, after maybe 6 months. Now 6 months, I feel it's too long, but I don't know because by that
People
physical.
are not getting after 8 or 9 months.
Wow. True, but then the residential status, then you have to really prove very hard that what have you done for those 8 to 9 months. So that becomes very difficult.
Come back then, if they don't get an employment in the very year and they come back then, so you apply both. Need to get an employment.
Yeah, I feel that you need to get an employment, maybe not very immediately, but soon enough. I feel it's difficult to claim that 8 to 9 months you what have you done then. So it becomes very difficult to prove that.
Then he's returning under the
No,
second
there is
one.
allowance.
That is what I will.
No, I'll tell you, there is an allowance if you have got a PR. If you don't have a job, they give you the allowance. Government gives you the
But that is
allowance.
Australian condition, no?
Yeah.
Yeah, but you have to prove, no, what have you done with it. So I feel that it's difficult, but definitely you must otherwise then keep all the documents in your place. The interviews that you attended, the kind of classifiers and whatever you have to keep, then you need to keep them on record to prove that yes, you were there for the purposes of employment. Inbound assignees, again, whether you come on a visit to India, again there have been recent cases where a person who retired from employment and came back to India, definitely that person was not on a visit to India, and there the courts have held that you are not on a visit to India. You have actually come back to India for good. You cannot say that you have come here for on a visit. Only if you are on a visit you are allowed those 181 days relaxation. So a person who decides to retire and come back to India, if that person, for example, post September just comes into India and says that okay fine, I have got 181 days relaxation. So for the first year I will still be considered as non-resident. In fact, the next 2 years also I will be probably NOR. That may not very well hold true, because what happens is that when they come into India and they settle here for good, and we have had cases where they actually break away all the linkages abroad. Before they come into India, they sell off their house, they get all their retirement benefits while they are there. Unfortunately, what happens? It happens in the same financial year in which they return to India. They get their employment benefits, retirement benefits for years on end at one stop. In say, for example, you would say that they have come here from say the 1st of December. They have come here for the 1st of December. Definitely, they have stayed here for more than 60 days. If they have stayed for more than 60 days, they have come here by the belief that I am coming on a visit to India. That is not the case. They have come here for good, and in that kind of a case, you cannot take this exemption of 181 days. You will be hit by being a resident, and in fact, that year's foreign salary also would become taxable. Your retirement benefits would also become taxable, unless your DTAA saves you. Otherwise, you are actually a goner.
But
So
you can guide them to go back in April, isn't it?
that's all. So yeah, very frankly correct. In fact, we have had a couple who had come here who after 60 years of service in UAE wanted to come back for good. We told them, very good, you come here, now you go back. And they were like, no, why? So we said, you will have to go back. There's no other option. You go back and come again if you want to. But you have to come back on a visit to India. You permanently settle only after April. Because then only there is a benefit. Otherwise, you lose out during that year. During that, and that is a very crucial year. Because mind you that you are earning a lot of money in that year. And tax department will go hell bent after you, because they will say, wow, there are crores of money which has come to this person, may it be earned outside India for services rendered outside India, it doesn't matter to them. And definitely these cases what I am talking about has gone up to appeal ITAT level, they will go up to High Court also. And frankly speaking, these are factual cases. Beyond a point, what will the court determine? And in any case, when you are looking at a reasonable clause, are you saying that you come on a visit to India? It is very difficult to say that when you come here back for good. So you should be very, very careful about these things. And timing is very, very crucial. Whether you are outbound or an inbound, you should be very, mindful of when exactly are you coming back and what are the number of days you already spent in there. Inbound, as I said, came on a visit to India or not, that has to be answered. Only citizen and PIOs concerned, covered. And again, there is a disclosure of foreign assets, taxability of other foreign incomes. These are we again taking in detail later. But essentially, once you have come back for good or once you become a resident, your foreign assets need to be disclosed. And there are serious repercussions now with, whatever we call it, that every other few months there is a new law which comes in. So the Black Money Act was one of them. So then, those kind of laws when they apply to you, then it becomes really bad. While in any case, they have not yet started applying it, but they will. Sooner or later, they will start applying those laws to see that, okay, whether that person has disclosed his foreign assets. Definitely there is a penalty already there. So all those kind of things you have to be very, very careful of when you are actually advising a person who has come back to India for good or who is leaving India. Now, as I told you that, resident in India we have already covered right now. What happens if you are a resident of another country also? And in this kind of a case, just going back to our example of a Belgian citizen who came here. Now, we don't know very frankly, but if in Belgium and in some other countries also like USA for example, citizens are considered as resident and taxed on their worldwide basis. Wherever they be tax resident of another country or not, it doesn't matter. In fact, Belgium also has in some ways, whatever I could gather from the internet, it says that if the person is on a population register, as what we all are right now, in a voter's ID card or in that sense, if you are already registered there, they are considered as a resident of Belgium. Will that save that person? It may, if you go to say that you are a resident both in India and in Belgium, then you go to the tiebreaker test which is available to you because you are now a dual resident. Now being a dual resident, what are the tiebreaker tests available to you? I'm sorry, I'm going into a residence issue right now, but this holds very, very important, very much important for the employees concerned. If in case you already covered this somewhere else in earlier of the sessions, let me know, then I'll skip through these slides. Essentially, tiebreaker tests, what are there? There are 5. One is where is your permanent home? And there can be a case where you have you don't have a home in neither of the countries or you have in both of the countries. Then what happens? Then you go to the center of vital interest, which is also, all these are very factual clauses. They have nothing to do with law. Whether you have or not, you have to prove by way of documentation and by way of your own collection of material that you have with you that yes, this is my house, these are my assets, these have been disclosed in my tax returns in Belgium, for example, in taking our case study. Then you have to look at the center of vital interest of personal and economic relations. Where are those? Are they in Belgium or in India? If you have come once in decades into India, in a sense that you have become resident in just once out of a decades in India, does it mean that your center of vital interest is in India? It can go either way, but you have to look at the family, you have to look at where your business is, where are you operating from. In some cases it may happen there is no business in India. Then that helps you because then you're saying that yes, I have actually always been working outside India. If that also is not able to, you're not able to satisfy, it doesn't come to a conclusion, then where is your habitual abode? And that does not mean you have a permanent home, but where is your habitual abode? Habitual abode means that where do you would say that where am I actually resident of? Where would you say that you have a house? It may be rented, it may be leased out, it may be in a sense not even a house per se, but where is your habitual abode that you feel that you are considering yourself a resident of? Again, this also has to be proved if it comes to a fight. If that also is not possible to be done, or if it is there in both the countries, then you come to nationality. And that is where probably our client may win, because she is a Belgian citizen. So if that comes to it, then we come to the nationality where you say that no, she is a Belgian, and therefore we consider her as a tax resident of Belgium, not of India. And if that also can be sorted out, then you go to the MAP, mutual agreement procedure, where the competent authorities of 2 countries will sit and discuss, which will take years on end, and nobody will actually go for that kind of a clause, at least when you are considered for individuals' residence, unless there is crores and crores of money involved that you are actually trying to go to this extent, because there is advisory consultancy also required for that procedure also.
So this permanent
Yeah.
home has to be in the name of that person, or
Sorry.
Permanent loan has
Yeah.
to be held by that person himself, or it can be held by any other?
No, not necessarily in the name of the person, but it should be as a permanent home. That is all. So it could be very well that it is in the spouse's name. It may not be necessarily in the name. So after you've done all this, you will be determined where you're resident of. In our case, what we discussed was either a resident of Belgium or of India. Now, what does that mean? Once you are considered as a resident of one of the countries under the tiebreaker test, what are you actually aiming for? Can you go ahead and file a tax return as a non-resident of India? There are two views on it. Some people say that yes, you can go straight away and file it as a non-resident of India because you have fulfilled the tiebreaker test, you are a resident of Belgium, you are no longer a resident of India. While the other view is that no, you are still a resident of India. Because of the treaty, you are considered as a non-resident of India. Therefore, all the benefits that are available to you as a non-resident will be available to you, but they are all benefits under the double tax avoidance agreement. You need a tax residency certificate, you need to state in your tax return that you are a resident of India, but claim all the incomes only which are sourced in India as taxable, not otherwise, and say that yes, all that we are not brought to tax into India is because we have got a double tax avoidance agreement, and that is the benefit that we are getting out of it. So these are two views definitely, but I would feel that the second view is better, that you claim you are a resident of India under the domestic tax law, but then you claim that you are claiming all the benefits as if you are a non-resident of India. Makes it very difficult to prove, no doubt, but claiming that you are a non-resident of India may itself have its own issues, so I am not sure. Paresh bhai, what would be your view on that actually? Can we state that you are a non-resident of India if once your tiebreaker test is resolved?
See, the tiebreaker test, as you rightly mentioned, probably is used for the purpose of tax treaty only.
Correct, yeah.
Because for the tax treaty, you may go to each article
Yes.
and say that you are a resident of the other country
Right.
for the purpose of tax treaty.
Correct.
Therefore, whatever source taxation concession
Right.
which should be available to you in India
Right.
may be available because you are a resident of the country.
Correct.
And after taking the source taxation concession,
Right.
you may file your tax return as resident in India.
Right.
I
Correct.
think that's the correct understanding by and large.
Yeah. Why this reason also comes in is that now the tax forms ask you for certain more declarations as far as your foreign assets are concerned. That's why it becomes more important. What if you take a stand that you're a non-resident, you don't disclose your foreign assets, and then you end up paying a penalty of 10 lakhs or above, just for the reason that you did not disclose your foreign assets. Now, those are not covered in the treaty. Just because you are a non-resident under the double tax avoidance agreement does not make you does not absolve you of not showing your foreign assets or not disclosing them in India, because the tax form actually is asking you to do it. Just as a digression, but frankly speaking, my feeling is that tax forms have gone beyond law to a large extent. Every year they have been amending tax forms to include so much more details. Bank details, passport, your foreign disclosure of your foreign assets, foreign incomes. Incomes, all that I am fine with, because this is an income tax return form. You may have to disclose that. But they have crossed into some barriers where the law actually does not allow you to. Some things are not the subject of law, but still they are asking for details. Frankly, wealth tax has been scrapped, so now they are asking for your total assets. All that is fine to a certain extent, but sometimes you feel that they are crossing a barrier by just amending the forms. You keep on amending the forms and you say that, fine, I am sitting here, I don't have to amend the law. Just amend the forms and keep on asking more and more details. But frankly, that's the sad state of affairs. Coming back to our point, do you disclose your foreign assets or not? My feeling would be that even if you are a non-resident as per the double tax avoidance agreement, you still disclose your foreign assets, unless there are certain exceptions given. I'll just read that out. In case of an individual not being an Indian citizen, who is in India on a business, employment or student visa, an asset acquired during any previous year in which he was a non-resident is not mandatory to be reported in this schedule if no income is derived from that asset during the current previous year. You feel as if there is big relaxation. When you read it, you feel, "Bhai, kya diya hai?" Then you have to actually digress and sit down and see. So what happens in this kind of a case is a person who has come on an employment visa, say for example into India, he is not required to disclose his foreign assets which were acquired when he was a non-resident, only if there is no income earned during that year. Say he has a house property outside India and he has given it on rent. The rent income is definitely earned when he was a resident in India. So again, you have to disclose the foreign asset, the house also, and the income also, because you are now a resident of India, you will have to give that to tax. Irrespective of whether you are a resident as per the DTAA or not, doesn't matter, you have to still give a disclosure of foreign asset. You may then claim that house property income is not liable to tax, or whatever reasons you want to give, that's okay. but probably disclosure may become important, and that is the reason I was taking this in a bit of detail right now. Coming to the next step is the sourced. So as we told you, there are two connecting factors, residence and source. For any income, it may not be just salary income, for any income you have to apply those two tests and see whether they are fulfilling those two tests or not. If not, then you are probably not liable to tax in India. Now what do we mean sourced in India as far as salary income is concerned? Then we can say that sourced in India means accrue or arise in India or are received in India. Essentially section 5 of the Income Tax Act, it lays down that for a resident or a non-resident, resident if you go to see, then it is accrued or arising in India, accrued or arising outside India, or received in India. These three clauses are available. While you go for a non-resident, then you are saying that if it is only accruing or arising in India, or deemed to accrue or arise in India, or received in India. These are three clauses which are applicable for a non-resident. Now what do we mean by accrue or arise? Frankly speaking, for salary income, still a long time, there has been and in fact now also there has been a debate about where do you say the salary income is accrued. Just to get some views, what would you feel? Where is the salary income arising from? Accrued meaning that, okay, fine, you got something, something has happened due to which you earned that income. Where would you say, or what would be the things which would say contribute to accrual of salary income? Any views? Good, the lunch was very good. The point is that what we are trying to say here is that accrual
Lunch was not good.
Sorry?
If a question is asked to you, then only you share knowledge.
Yeah. The point is what you are trying to say here is accrual. By and far it would mean that, okay, you would say that where it is salaries earned, that is generally the view that a person would take, that wherever I rendered my service is where the income is accrued. Very frankly speaking, that is not what they are meaning by. Accrual means the right to receive the income. Where is the right to receive that income situated? And that is, frankly speaking, in loose words you can call it as an employment base. And I am just quoting one decision here in my first bullet point under accrual. It says, involve the concept of receivability or the right to receive in a particular place and do not refer to income being earned in that place or being derived from a source of income situated in that place. This is very important. What it means is that you may have earned the salary in USA, but if you are an employee of an Indian company, your right to receive that income is still in India. And that is where it becomes very, very critical that under the domestic tax law, your income can very well accrue in India if your employment base is in India. And employment base by per se does not mean just an Indian employer, but where do you have the right to receive that income? It can be from, where the right to receive the salary arises, where the employee services functions are supervised from, where does that employee have to report to, where the employer utilizes the employee services, does he utilize it in India or outside India, takes decisions, where does he take the decisions regarding the employee's employment, do I have to send him abroad or not, where are those decisions taken, are they taken from India or outside India, maintains employee records, the muster roll, etc., all those records, where are they maintained? That in some total kind of, you can loosely say is the employment base, and where that employment base is where the income gets accrued. There are a couple of decisions, very old decisions. Yeah, Fra Fraison, CID versus Fra Fraison, that is one decision where a person was a citizen of Siam at that time. It's a very old decision, Siam in today's Thailand. He was a person who was a resident of, who was otherwise employed with a company which was based in Thailand but was working in Burma. And that time British India governed Burma, and therefore British India wanted to say that no, that person's salary is taxable in Burma, that is in British India, and therefore liable to tax in British India. And the decision was held in favor of the employee, or rather you can say in the employer, because the employer would have borne the tax, but in favor of the employer in that sense by saying that no, his otherwise right to receive his income was always in Thailand, it was never in Burma. He earned his salary there, that is not an issue, but he would have anyways earned his salary wherever he would have gone. But where would you have gone if you wanted to say that no, I want to claim my right to receive the salary? That would have been Thailand. So that is one decision. There are a couple of other decisions, also very old decisions. Frankly speaking, in recent times, nobody has come to this kind of a conclusion as far as legal precedents are concerned. But that you would be very careful of, because somewhere a lot of times you assume that just because on outside India does not make it easy to say that it is also not accrued. It is also accrued outside India. The second phrase comes to is a deemed to accrue or arise in India. Where do you say it is deemed to occur or arise in India? So there again section 912 and 913 are two clauses where they have brought in that. What they have said is that the salaries earned in India, that is for services rendered in India. What does it say? 912. The following income shall be deemed to occur or arise in India. 2 says income which falls under the head salaries if it is earned in India. Then we had a Gujarat High Court decision of S.G. Pantale, where it said that earned in India again means where that employment basis and not where you have rendered your services. So then they went and amended this clause. They put in an explanation which says for the removal of doubts, it is hereby declared that the income of the nature referred to in this clause payable for A. service rendered in India, and B. the rest period or leave period which is preceded and succeeded by services rendered in India and forms part of the service contract of employment shall be regarded as income earned in India. So these two clauses determine that what is earned in India, and when you have something like that, when a foreign employee comes and gives services in India, you can very well say that his income is deemed to occur or arise in India. And the last part is received in India. Received in India means where the first receipt of income happens in India. Now what do we mean again by first receipt of income? First receipt, in a very normal sense, you would mean that okay, when is the first right to receive your income? When you can say that you have received that income for your own control. Maybe it is not, it has been declared to you that yes, you are going to earn that bonus, but you do not have a right to claim that, or it is not appearing in your bank account, is until then you have not received it. You may have been given a good nice increment later, but that increment is not given to you. Until then you have not said that you earned that income or rather received that income. And when it is received outside India for the first time and then it has been remitted into India, it does not remain as income. It remains only as money. It becomes capital for you. As long as the first time that you received outside India, that is where you earned or received your income. Once you receive your income, tomorrow you say that okay, no, I have no use of that money lying outside, let me now remit it back to India. That does not make it income. It is your own money which you are just transferring from one account to the other. So that is clarity that should be kept. That does not mean that just because you immediately, for example, you received on day 1 in USA and day 2 you have transferred it to India. Still it means that you have received it outside India. It does not make it that you have received that income in India. There have been some cases or some clauses where some people say that you have to actually let a year pass and all that. That is, I don't believe in that. In essence, the moment that it hits your account outside India, it has become your income which has been received outside India. That next minute you may remit it outside into India, that does not make it any different. It still remains as income received outside India. Why are we discussing all this? So coming back, summarizing, in Indian resident, worldwide salary taxable irrespective of where it is sourced, and non-residents only salary income accrued or deemed to be accrued essentially or received in